Good afternoon, everyone. It's about 2:45 here in the UK, so the American trading session running for nearly 15 minutes. So started quite well, and all the measures of the trend on VectorVest are up, and we've got a green light, at least so far in the day, in the price column of the color guard, telling us that the price of the VectorVest composite is up day over day and week over week. So the short-term trend is up, the longer-term trend is up, and we have a confirmed up in place. And the old color guard is mildly bullish. So let's have a look at the VectorVest composite, which I think I've got open. Here we are. That's the VectorVest composite, folks. And on the composite, I put the medium-term market timing signals that I'm following in this campaign, the so-called DEW, which in fact turned up on the 6th of April. And it's still up. There was a couple of dodgy days, but it's still up. But it's firing a warning signal, in my humble opinion, in that the price is flat here, but the buy-sell ratio is falling. I think I've said it 1,000 times now, but if we do see a DEW sell signal, that should be taken quite seriously. Nevertheless, the market is still rising, and I'm still holding positions, and they're all going fine, I'm happy to report. So let's just have a look at some of the headwinds, and there's some interesting aspects to this market today. This is the SPX, the S&P 500 index, and that's what it's done. There is the 6-month view, the sell-off and the run-up, and I can put the DEW on there as well. There we go. There's the DEW just down here, which is still positive. Now, if we pull this into 3 months, we can see that we've got a very important resistance level here. We've got this market has camped at a 78% retracement of that range. 78%, a very, very important number. In fact, one of our customers down in Wales has in fact called me the 78% man because I talk about it so much. Nevertheless, and this market has charted what technicians would refer to as a Gartley pattern, made famous by Harold McKinley Gartley about 100 years ago. It is a wave down and then 3 waves up, and this little wave and that wave are exactly the same height. So as you can see, the shorts are actually using this level to initiate short positions, and the high of the day over the last 3 days is sitting up there at about 31.70. It actually traded above that, but not during the pit hours. It traded above that on the overnight market, where the liquidity is actually quite poor. So 31.70, and if this market is to keep going up, it needs to get through that level, and if that's the case, then we can push up to this high, and we can break a new high. But this level sitting around 3170, 3175 in the S&P, incredibly important, and the shorts in fact have produced a low risk trade that they're hoping is going to work. But as in the world of trading, nothing is that simple, because if we actually look at the 30-minute chart, which I am trading, that's my favorite trade, it's actually traded a long position, and I'm long of it at the moment. As you can see, this is the run-up that happened when we were sleeping on Sunday night in the UK. It happened in the overnight market, and by the time I got myself out of bed, it was virtually over. So we've got 5 waves up. 1, 2, 3. That's 4, and this is 5. And then we've had 3 waves back, and that low, folks, is 78% of that, and that high yesterday afternoon in fact was 78% of that. So this is wave 1, this is A, this is B, this is C, and C had 3 waves. If you're an Elliottician, you will know that a wave C can either have 3 or 5 internal waves. This one has 3. And it broke up, so I've got that big Gartley somewhere up around here on the daily chart. That's the little bit that traded in the overnight market, didn't actually trade in the pit. So if we see the pit getting above that 3170 level, I'm currently long of this, and I bought into it this morning. That was 8 o'clock. That was London hit it here, and then it pulled back, and I bought into it somewhere around here, 31.48, somewhere around there, 31.48. And my stop loss initially was down there, but the stop loss is now at entry, and I'm hoping that we're going to see a nice move up. When I get up to that 31.7, 31.80 level, I'll be quite nervous. So the 30-minute chart looking exceptionally healthy. It's got a lot of work to do to get through those highs that have been in place now for 3 days. The DEW is still up, and I'm still holding positions in the American market based on that, and the DEW being up and the primary wave being up gave me extra confidence to take this long today. I didn't get that. I got a little bit of this, I think. I got that yesterday afternoon, and I've got that today. So I didn't get the sell-off yesterday afternoon, which I should have got, because I was doing a webcast for VectorVest USA, and I missed that sell-off. So I'm hoping this is going to be a big one, certainly up around here. I'll be looking maybe to take a little bit off the table. So all is good, folks. There is the DEW, and I think I'm going to do my best to try and sit in positions. I haven't added any new American positions since I've last done a video. I can have a look at those quickly if I can find them. Viewers, watch list viewer, cash leading giants, all just in there. An awful lot of stuff is open. I'm holding Fortinet, I'm holding Lulu. Square has been going great. Microsoft I've had for a long time. DXCM I bought a little bit of the other day, and Trade Desk is just going beautifully. I bought that at 300. It's now at 459. AMD I'm underwater in, and the GDX is moving there. Gold market very overbought, but in the throes of a very strong trend. It's overbought. It's worried me because it's overbought. Nevertheless, the trend has been exceptionally strong, and the GDX up 3% odd today. So those are all going well. I'm worried that the buy-sell ratio was flashing a signal that we need to be careful, but the trend is still strong, and as you can see, that 30-minute chart moving up the page very nicely today. So what about the UK? Well, the UK, that was their close last night. Underlying trend is up. The short-term trend is up. We've got a confirmed up in place. I'll show you the DEW in a second, but it's up as well. So if I now go to timing, pull up the market timing chart, and that's the DEW, but I'm going to start with the MTI layout and just get rid of the RT. And again, we've got this. In fact, the divergence is actually more serious in the UK than it is in the US, because the UK market has in fact made a new high here. But the buy-sell ratio just could not follow, so we have to be very careful about that. And if I put on the DEW signals, there's the DEW signals, and all is still good here. So I'm holding positions based on that, but that divergence, our expert on the buy-sell ratios, a young man down from Wales, and he's done several Monday afternoon presentations for us on how to interpret the buy-sell ratio, and he concurs that we have a bearish divergence in this, which has been rattling on now for the guts of a month. So we need to be careful. These divergences can hang in for much longer than we would think. Nevertheless, it is a warning signal, and I'll say it again, when we get a red signal here that the DEW is keeled over, then stops need to be brought very close to the market, in my humble opinion. If you have a look on VectorVest USA, you will see that Dr. Bartolito's fundamental model of the American market is showing that we're in a bear market. Dr. D looks at earnings of the S&P 500 companies, he looks at interest rates, and he looks at inflation, and his fundamental model, which has got a 30-year history, folks, is saying that we're in a bear market, and we have to respect that. So it is a guideline, but certainly yours truly will be taking a sell signal out of these markets very exceptionally seriously. I haven't changed any of the positions in the UK that I'm holding, and they're all going reasonably well. and I bought into Avast. I think I told you last Friday, and it hasn't broken up through that last high. Somebody emailed me to say it was off a little bit today. So I'm holding all the usual suspects, and they all seem to be doing quite good. So I'll report again on Friday. Nothing that much new to say, but the S&P going very strongly today, indeed, after that three-wave sell-off, and I would suspect that our market will follow it up. So let's just keep our eyes peeled here above 3180, let's say. Then I think that the S&P itself will push towards these highs. A lot of work to do to get through these levels, but a great day to be alive, a great day to be in markets, folks. I hope you found this useful. I've got this coach on YouTube these days. He phones me. I think he's about 17, and he says that I must tell you all to subscribe to the channel. So if you wouldn't mind, subscribe. It doesn't cost a cent, and I have no intentions of putting any advertising or anything on the channel. So, but if you would subscribe, that would be great. Thanks very much indeed. Bye bye.